The volume is actually a bit more than we expected, so we're already at a little over 50 million shares traded, and they offered a little over 55 million. So I think that is pretty unique. So I guess we're seeing a lot more activity than we had expected.
With regard to winning this deal, as they say in the listings business, it's usually kind of a battle between the Nasdaq and the New York Stock Exchange. Why is it that Robinhood chose Nasdaq as its listing destination?
Well, we are having a pretty good run anyway this year on the competitive nature. We have about 70% of operating companies choosing Nasdaq. With Robinhood, we've known them for years. We try to develop partnerships long in advance. There's a lot that you can imagine we could be doing with Robinhood. And they've been a good partner to us. We've been a good partner to them. And I think they just naturally felt that it was right home for them.
Execution risk is always, a focus, of course, for listing venues such as the Nasdaq on day one. People have made kind of a comparison between Facebook with the retail allocation of 25%, as well as Robinhood. Its retail allocation is quite high as well. In terms of kind of the execution, were you guys running trials for this one in anticipation of that heavy volume, in anticipation specifically of the retail orders, which, of course, each of them do tend to be much smaller than the institutional orders? Sure.
The complexity of IPOs gets greater when you have more orders. Not necessarily volume, but orders. And we did anticipate high retail participation. So we test for every IPO. We test weekly. We've done well over 1,000, almost 2,000 IPOs since Facebook. If you think back to Coinbase, Airbnb's very large deals. So execution risk wasn't really, we think about it every day, all day, but was not a concern for us.
All right. Kelly has a question back in studio.
I do, Leslie. Thank you. And Nelson, I guess my question, I don't know if it's one that you can answer, but people are joking a little bit now about whether Robinhood should have chosen the SPAC route or one of the myriad other options that's now available to go public. Any thoughts on why the traditional IPO route was so appealing to them? And again, I mean, what would you say to investors who might be holding the shares right now, like retail, public, or otherwise, who are disappointed that it's trading lower? Is there anything you'd say to them?
Well, great two-part question. I'll look at the first one. So I think we talk to private companies every single day. And they love the fact there's optionality with the SPAC market, with the traditional IPOs. We're seeing more direct listing these days. So I still say there is a lean towards the traditional IPO if companies are already well down that path, which obviously Robinhood was. So that is still the primary choice for companies going public today. And I do think we're going to see that be fairly consistent. Although, even Monday we had Lucid go public through a SPAC. So we are seeing activity on both sides, but I think companies have leaned themselves towards the IPO. I think when you look at one-day performance, I have been in this business for a little over 20 years, and a lot of times the day one performance is clearly not indicative of where the stock may be in a week or maybe a month or two. So I think you have to love the long-term story of Robinhood, democratizing access to capital or investing for a lot of the retail investors. So I think if they believe in that and the mission, the opportunity they have in front of them, they want to be long-term holders, but everyone makes their own decisions on that.
You mentioned that investors are leaning more toward the traditional IPO process as opposed to maybe a SPAC or a direct listing. What do you make of today's activity? Does that send a signal to people who may have been considering the IPO process, the traditional IPO process, to say, well, actually, maybe I'd prefer to do a direct listing or a SPAC because you do get a little bit more in terms of price certainty with a SPAC, and then with the direct listing, you don't have the same kind of price at this point, trading this way on day one. It's just an auction.
Yeah, you could probably go through the pros and cons of each in a lot of detail. You mentioned one with the SPACs having some price certainty, but there's also other factors of the IPO that are more attractive. I say as I look to the fall, as long as the markets hold up, we have an amazing pipeline of companies that are going to go public both routes. But I'd say it really is an individual company decision. And we've had so many IPOs here do so well, as in addition to some that may have had a choppier debut. So I really think it's every company makes that call, and they do on a variety of factors. And I think again, I go back to companies having that optionality is what we continue to hear. They love that, the fact there's different methodologies to go public today and more unique ways to tap the public markets.
Who doesn't like?
Shepard Smith here. Thanks for watching CNBC on YouTube.